Thank you for that update from the FNO desk. And let's take this conversation forward with George Joseph from ASK Investment Managers, who is now joining in to talk about markets and a lot more. George, good morning. Thank you for joining in. What do you make of the earnings season so far? It's not been the most earth-shattering results, if you could call it, but no bad news is good news if you would take that positive.
Absolutely, absolutely. So we are seeing that after last couple of quarters, actually it's bottoming out of the earnings and the earnings picking up. And we are of the opinion that the earnings is looking interesting in a couple of pockets, especially the domestic cyclical sectors. It is looking very interesting. And what we are seeing as a muted earnings season, specifically from the global companies, and especially exposed to ex of US also, we are seeing some sort of slowdown.
George, where did we see the big beats in Q2? What are the sectors or stocks or themes that you're betting on for the next 12 months? I mean, what has changed in your portfolio or your recommendations to clients over the last 3 or 6 months?
What we are seeing is that, it's a very interesting time. You're seeing the festival season has started quite well. And you're having a very low inflation interest rate scenario. The NIM compression for banks is behind. The problems in MSME, SME segment, which is clearly noted in all the con calls of large banks, saying that, that is also behind. The MFI issues are behind. So we are at a situation as a cusp of massive earnings recovery. And I believe that in the next 1 year, you will see all the domestic cyclical sectors, which are predominantly into banking, financials, auto ancillaries, which anyway is showing good results. We are going to see a good tailwind of growth coming in. Cement, name it, which is linked to the domestic economy. That's where we see a good possibility of growth.
Okay, so this is about some sectors which are domestic facing. What about chemicals in general, George? A lot of these companies have reported good numbers. Specialty chemicals, let's talk about fluorochemicals. Navin Fluorine reported good numbers. Do you think finally we could see some recovery coming by in these names?
Yeah, truly so. If you see the recent results of some of the chemical companies, the names of some of them, what you have mentioned, it is interesting, across beat, across segments, and some of the large ones, what is reported also as good numbers. What we see is that 2024 was a very lull period. We have seen the sector going through a tough time in terms of earnings season, and now it is coming out of the lull period. We have exposure to chemicals. We are more bullish on chemical sector, specifically the specialty chemical sector is also called ones, which is better than the global facing pharmaceutical companies. That's the way we have positioned ourselves.
In your positioning, George, are PSU banks part of it as well? They've been doing a lot of the heavy lifting over the last couple of months when it comes to the banking sector outperformance. But also valuations being on the cheaper side, do you believe that it is time for PSU banks to see some re-rating because of the fact that the results have been okay? And of course, there are some further triggers as well with regards to the weight rebalancing of the Nifty Bank.
So a couple of things are working in the near term. What you mentioned, your weight rebalancing, the news flows around that. But if you look at the structurally, from 2018 onwards, then non-performing assets have been coming down. This is one of the lowest point since the peak of 11.2% of the NPA, gross NPA. What we have seen is now 2.3%. So there is a system-led, the non-performing loans have come to one of the lowest point in the recent times. And to me, it is looking very similar to the 2000 to 2010 decade, where we are seeing the cusp of the capex cycle recovery. The last 5 years, probably the early capex cycle was visible. Next 5 years, we are thinking that the capex cycle will kick in further. And we are seeing that the capex to sales is increasing from 2022 onwards for BSE 500 companies. So PSU banks are tuned to benefit in this kind of a juncture. And that's the reason, 2003 to 10, we have seen PSU banks had the massive run. And the next 10 years, it was a bad phase. And again, that phase is coming back. 5 years into the massive return generating phase for PSU banks in the last 5 years, I believe it is still a lot more glory yet to come.
Thank you very much for joining in. Short conversation, but there's lots going on in the markets. Thank you very much. Get into a break, but as we do that, here is a quick programming note. SBI's 12th Banking and Economics Conclave focused on India's quest for self-reliance gets underway on the 6th of November and will feature conversations and insights from the biggest of policymakers and industry representatives, including Finance Minister Nirmala Sitharaman, RBI Governor Sanjay Malhotra, SEBI Chairperson Tuhin Kanta Pandey, Anish Shah of the Mahindra Group, Tata Power's Praveer Sinha, SBI Chairman C.S. Sethi will also be at the event. Tune in to CNBC TV 18 to 45 p.m. onwards on the 6th and 7th of November for all the key takeaways from the event.